2010 will go down in the books as one of the best ever years for apartment demand in Dallas-Fort Worth, but it's been a lopsided recovery and there's still some ways to go. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Dallas-Fort Worth update. DFW is one of the nation's leaders in net apartment demand in 2010 with an incredible 23,470 units absorbed in the past 12 months. That is the best performance seen in DFW since the year 2000. And strong demand brought up occupancy 2.3 points in 2010, a very strong result considering DFW also led the nation with more than 10,000 new units delivered in the past year. And that said, occupancy did inch down a slight 0.2 points in fourth quarter specifically, all of that coming because of some losses on the Fort Worth side of the Metroplex, while occupancy change was flat in Dallas. But here's the bad news for Dallas-Fort Worth. Overall occupancy as of year-end 2010 was still pretty weak at just 91.3%. Why is that? Well, take a look at this chart. The bars here show you occupancy rates by age category, and the number is above that shows you the change in 2010. And you see the newest apartments built since 2000 in the 1990s, very strong growth, occupancy up 4.8 points in the newest segment and 2.6 points in 1990s era units, and those two niches lead with occupancy rates above the North Texas norm at 93% or higher. And in the 2000s era segment, if we factor out new supply, occupancy there is above 94%. But in the older apartments, we still are seeing some struggles. You see that apartments built in the 1970s and earlier remain in weak shape with occupancy rates below 90% following minimal to no change in 2010. And we're going to see that same story played out on the rent level. Overall, annual same-store rent change in DFW trailed the national norms with an increase of just 1% in 2010, but in the 2000s era apartments, rent change was more meaningful, 2.8%, and there was less growth in the older categories, and rents actually fell 0.6% in 1970s vintage properties. Let's also talk briefly about some submarkets. Here are the top 5 submarkets in DFW for revenue change. And revenue change, again, is a combination of same-store rent change plus occupancy change. And this list is dominated by upper-tier submarkets. All 5 of these submarkets have monthly rents that average more than 10% above the DFW norm. You see on top of the list, Frisco Prosper, revenue growth of 19.2%. Incredible. The apartment base here ballooned 40% in the past 2 years. These new properties are leased up extraordinarily well to the point that rents are jumping sooner than expected. And in North Fort Worth, very similar story. The apartment base here exploded more than 50% in the past 3 years, and tremendous occupancy growth in 2010 as all of those new units have leased up well, and as a result, rents are jumping far earlier than expected, up 6.6% in 2010. Another impressive one for you, Uptown Dallas. Total revenue growth of 16.2% in 2010, thanks to rents leaping up a Metro best 9.2%. which puts Uptown Dallas among some of the better performances among submarkets nationally for rent growth, particularly strong performances in the Uptown Dallas area. And rounding out the top 5, also strong performances in the upper-tier Collin County submarkets of Allen, McKinney, and Plano. So, why the big disparity between upper-tier areas and lower-tier areas? Well, you got to start with the job story. Lower-paying jobs represented the bulk of the layoffs during the recession, and in 2010, while DFW has been among the nation's leaders for job production, those jobs have generally been hoarded by higher-paying upper-tier jobs in the services categories, particularly health, education, and business services. We still haven't seen a strong comeback yet in some of the lower-paying jobs, particularly in construction, which was very hard hit during the recession. So that wraps us up for today. Until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.